It's an election year in the U.S., so what's the impact going to be on precious metals? I'm with Brien Lundin. He is the editor of the Gold Newsletter and the man behind the New Orleans Investment Conference. Welcome back to Kitco, Brien.
Great to be here. Great to be here.
What is the macro backdrop for gold? We've had an interesting 2023 because we had the Fed ratcheting up. What's the macro picture that you're looking for?
Yeah, if you look at 2023, the markets tried, and when I say the markets, not just metals market, but stock market, bond market, everything is so dependent upon Fed liquidity. Everything rises together and falls on the promise or the withdrawal of that liquidity, monetary liquidity from the Federal Reserve and other central banks, that it's all one play now. So throughout 2023, we saw the markets try to price in a pause. Then they got that about midsummer or so. They were actually pricing it in midsummer. Then in the fall, it came to be. We kind of realized from Fed rhetoric and actions and that they were actually pausing. Then they started trying to price in the pivot. And we saw a lot of give and take, a lot of ebb and flow as market emotions, investor emotions swung back and forth on whether they would actually pivot or we were going to be higher for longer. Then it came out over the last couple of months that indeed we were going to get a pivot this year. Now the argument, the reason why we have those dips and surges in all of the markets is because they're arguing over something that would have seemed silly 6 months ago. And that's, well, are we going to have 3 cuts this year, as the Fed says? Or are we going to have 5 or 6 cuts this year? And when are they going to start? To me, we're getting kind of mired in the details, investors in general. The big picture here is shifting dramatically. We are going to have a pivot. We are switching from a rate hiking cycle to a rate cutting cycle. That's huge. That's tremendous for all of the markets, and I think especially so for gold. Gold did very well during what was arguably the most severe rate hiking cycle we've ever seen. It actually rose during that period and rose considerably. Now we're going into a rate cutting cycle, so we're going from headwinds, where gold did very well, set all-time highs, and now we're going into a period where it's going to have really tremendous tailwinds. So, I think if you look around you, in investor sentiment, it's mixed, and in particular in the metals market, it is surprisingly dour, considering gold is still around an all-time high. I think we just need to get a little more momentum to prove to the world that this is indeed a sustained bull market in gold based on monetary issues that aren't going away. And I think everything's going to work out fine.
Why is 2100 a pivotal mark for gold?
Well, we set the last high at around 2080 to 2080, 2085 or so on a spot basis in December. That could be viewed at some point down the line as a quadruple top, because we've hit this area from 2060 to the 2085, somewhere in there, 3 times previously. So this could be the 4th time unless we actually break through. The next big number, both from a psychological aspect and a technical aspect, is around $2,100. And I think that's enough to prove to generalist investors that there is a trend here that's sustained. And at that point, we're going to see more money come in. Yeah, one of the key factors of this market that we've seen really over the past year or so is that the Western investors have been largely absent. I look at the GLD gold ETF, the preeminent gold ETF, as a proxy for Western investor demand. It's typically, as Western investors typically are trend-following investors. So you see the holdings in that ETF rise as the gold price rises. Well, we didn't see that last fall. We saw gold again set a new record high December. It really surged in kind of stealthily. Nobody commented about it. The holdings in GLD were stagnant or actually fell. So the Western investor is not involved in this market yet. This buying right now is coming from Eastern investors and predominantly central banks around the world. And that's sustained buying. It's not necessarily from the central bank side, not necessarily price-sensitive buying. It's just consistent buying. And that's been keeping the price where it is and elevating. The good news is that when Western investors get in, there's tremendous buying power there that's still there to fuel the market. And they will be trend-following investors. They're going to send the price higher, and they're going to follow that trend to, I think, much higher levels.
The resource sector, the mining sector, it's a very interesting sector because it has two very divergent theses. And we're talking about the precious metal thesis, and that has to do with concerns about fiat, just having more control over what your financial means. The other one has to do with energy transition, and then you see that's been driving everything else having to do with copper, nickel, go down the list. Can you compare those two themes right now? And can the person that edits the Gold newsletter choose a favorite?
No. My favorite is whatever individual company or stock is going to make the most money for my readers within the smallest period of time. I'm not a big thematic investor. I think that's the underlying what powers the market, rises all boats, the rising tide that lifts all boats. But I'm looking for special situations within those themes that are more high-powered, have greater potential. But they are separate and distinct. A little crossover. I mean, you can find copper, gold deposits, but I'm very excited about both those stories. In particular, from the battery metals energy transition end of it, copper is just a tremendous play. There are ways you can get around through substitution to some degree every other metal and mineral in the battery metal mix, except copper. You really can't substitute for it. And copper is a tough business. It takes 10 to 15 years. 10 is light speed to get a new copper discovery into production. And there has been very little money spent on exploration and development over the last 10 to 15 years. And there is a supply crunch that is inescapable. If you took out the whole electrification trend, you would still face a copper supply deficit over the coming years, just on a base case scenario. You add that electrification in, and you're going to need much more copper than we have today. And you see a lot of these deposits that are known, that are controlled by junior mining companies right now, that have not yet been developed to large scale, haven't been developed for some reason or another. And there may be 40 or 50 of those around the world. They would all need to be developed and in production to even come close to meeting the copper supply demands that are facing us. So it's a very exciting area. It doesn't have necessarily the kind of explosive investment potential that a gold discovery will deliver, but it is one of those kinds of find a good place and set it and forget it. And in 3 to 5 years, I think investors will be very highly rewarded by finding some of these really undervalued plays right now.
You're based in the U.S. We're heading into an election year. How is that going to play against the metals?
It's an interesting question. I'm so dissatisfied with the political situation in the U.S. I know my Canadian friends have a lot to talk about in that regard as well. But I don't think I think it's who's going to lose the most. If you look at Trump, who I think is very likely to win now, he's a low interest rate, easy money guy. But I think we were going to be in that kind of a situation regardless. The debt load that we have today have built up in the U.S. in federal debt is such that we cannot survive even with interest rates where they are right now, and they will have to drop. The debt service costs in the federal debt are now about $1 trillion a year and set to rise well above that if we remain anywhere near these interest rates. So my fundamental case that I present in all of my presentations and writings in Gold Newsletter is that the dollar has to depreciate at a greater rate than you're paying on the debt. Otherwise, the whole house of cards falls apart. In other words, you have to have interest rates below the rate of inflation. So you have to have negative real rates going forward because the debt load is so high. And so that is a backdrop that is tremendously bullish for things, for real assets, for precious metals, base metals, real estate, anything that is a real intangible assets. And I think we are entering a case where if you look at the long sweep of history, commodities have gotten tremendously undervalued in relation to financial assets. And I think we're returning to an era where commodities will be much more richly valued and relative to other assets.
We're at the Metals Investor Forum. What are some of the top ideas that are working for you?
Well, I had on my panel some great companies. I had Alaska Energy Metals, I had Banyan Gold, I had A-Mark Resources, Vox Royalty, Baptec Environmental, that were all, it was an interesting panel because they were all great investments for different reasons. And one of the primary themes that came out of all of that is, or that I've been stressing to people, is that values right now are just extraordinary. People ask me if I've ever seen a junior mining market as bombed out as this one. And I tell them, well, yeah, I actually have. And that was 1999, 2000. Mm-hmm. The difference is that back then, gold was trading at $252 an ounce. And we needed a couple of years of sustained price rises in gold, even a double bottom in gold at that point in time, before we could get the junior mining share market really excited and energized. Right now, in gold, we're right at all-time highs. So we don't need 2 years of a bull market to get the junior mining shares really going. We maybe need a couple of weeks, frankly. And like I said, $2,100 is within reach. It could, in the right environment, we could get there in a couple of days of trading. If we get to that point and prove to the world that this is not a quadruple top, this is a new breakout, it's going to bring in generous money again. That's going to take us to far higher levels. So that's why I've been calling this a generational opportunity. The last time we had this was around the turn of the century. And then still we needed a couple of years to really get things going. It's going to get started so quickly this time around in the junior mining market that you're going to get whiplash. It's just poised. There are tremendous values out there. And, you still want to be somewhat selective. You still want to be selective, not even somewhat. You want to be selective. Mm-hmm. But there are so many exciting opportunities out there just waiting to be grabbed. You can build a high-powered, very diversified portfolio, which is, and largely eliminates some of the risk in the sector when you focus on a few companies, because some things can go bad. But you can build up a wide-ranging portfolio, just, again, generational opportunities right now. And it really is exciting to me, despite the dour moods you see on all of the junior mining investors these days.
Lastly, Brien, you've been a gracious host for Kitco at your New Orleans Investment Conference. I understand that 2024 is going to be kind of a special year for the show.
Yeah, it is going to be our 50th anniversary. And it is the longest running.
You've been organizing these things since you're 6?
Since I was about,
Yes. Mm-hmm.
No, I was not that quite of a child prodigy. I started in the business in 1985 working for Jim Blanchard, who started everything. And at that point, that was about the 10th annual New Orleans conference. So I've only been in it about 39 years. Mm-hmm. But yeah, I own and run it now, and it is an extraordinary event, as you know. And this year, being the 50th, we're going to pull out all the stops. We have some exceptional guests coming. Of course, we have great speakers every year. Being in New Orleans gives it an extra flavor, an advantage, if you will, that people really like to come down here, down there, and be of like-minded people in kind of a destination environment, exciting place to be. The intellectual energy at our event just permeates the halls. It's really a lot of fun. And the speaker roster is unsurpassed. You won't find speakers like we have bring together anywhere else. This year, we're taking it up a notch because it is our 50th anniversary, and we're very excited about that.
Brien, Kitco looks forward to it.
Wonderful. Look forward to seeing you there.
My name's Michael McRae here with Kitco Mining.